Thank you, Mr. Chairman. Mr. QUAN, I think you stated it well that the impact of eliminating risk-based pricing would have a very negative impact on low and middle income borrowers. It would eliminate access to credit and drive up the cost of credit. A recent study from the United States Chamber of Commerce corroborates your testimony and found that eliminating risk-based pricing and replacing it with a uniform pricing model would raise prices on consumers and limit the availability of credit and other financial services, especially to low and middle income borrowers. And that makes sense, right? If lenders can't accurately predict a borrower's ability to repay, they need to raise prices or limit options to account for the increased uncertainty. A prohibition on using predictive data would not make the system more equitable, but would instead dramatically exacerbate inequalities that the authors of these bills say that they want to fix. Speaking of inequalities, Mr. QUAN, are you aware of any of the three major private credit reporting bureaus using race-conscious criteria?
No, I'm not aware of.
To your knowledge, and is there any evidence to the contrary that these credit reporting bureaus use only race-neutral criteria, payment history and the like?
That is my understanding, sir.
And yet, one of the majority's witnesses says that the current system of private credit reporting bureaus is plagued with, quote, systemic racial inequity. Let me ask you this question, Mr. QUAN. How would excluding certain predictive credit data from credit reports harm a low-income but financially responsible African-American consumer with a high credit score?
Well, so you really touched a very important point. And I think, I would also give the credit to the other witnesses for really highlighting the important fact that a lot of Americans, especially people of color, have challenged in getting into the mainstream credit system. That is because you have to have credit in order to build credit. If you don't have credit, how can you build credit? So that's why it's important to have this new source of data, payment data, alternative data, rent payments, utility payments, for the lenders, available to lenders to use to bring access of credit to these people.
Well, I mean, my point is whether you're white or black, Hispanic, whatever your racial minority is, if these credit bureaus are using race-neutral criteria, and maybe you are a low-income individual, but if you pay back your bills and you have a positive credit score, a positive credit history, your credit score is going to be higher. And if you eliminate the risk-based pricing, the cost of credit is going to go up, and that's going to harm that borrower regardless of their racial profile. Is that correct?
That's absolutely right. Correct. So it doesn't really matter what your color of the skin is, what religion you believe in. If you can pay back the loans, your score will go up. If you pay back the loans on time.
Thank you, Mr. QUAN. Let me ask you about this National Credit Bureau idea. We've talked about it ad nauseum here, but what incentives does a private credit reporting agency have in competition with other private credit reporting agencies to get credit data accurate and get it right?
If the credit bureau cannot provide accurate data to lenders will stop using their services, period. Because what lenders want is really accurate data for them to make better lending decisions. So there is a natural competition among three bureaus to make sure the data is accurate.
And Mr. QUAN, what incentives would a single government bureaucracy have to fix errors?
Well, so I wouldn't even call it an incentive. It's just their ability, whatever, I'm not a technologist here, so whatever best methods available to the private sector, the government can use that too. So there's no reason for me to believe the government is able to do a better job in improving accuracy, if we believe accuracy is a big issue today.
And let's just, one final question on this alternative data issue. Obviously, utilization of alternative data by these private credit reporting agencies is helping Americans gain access to credit. But I think I heard one of the other witnesses say that positive data should be reported, but not negative data reported. How would that impact the cost of credit if the data was only selective in that way?
If we believe accuracy is important, accuracy means complete data, whether it's positive or negative. If you specifically ignore negative data, that is not accurate. So we have to make sure we have accurate and complete data available for lenders.
Thank you. I yield back.